What's up everyone, it's Levi from Wall Street Survivor, and today I'm going to break down a little app you might have heard of called M1 Finance. I'm going to explain exactly how M1 Finance works, break down some of my favorite and least favorite features of M1 Finance, tell you exactly how much it costs, and then discuss what type of investors I think would benefit most from using M1 Finance. So let's get right into it. Make sure to like this video if you want to see more videos like this from the Wall Street Survivor channel. Subscribe, and if by the end of the video you feel like M1 Finance is right for you, I do have a link in the description below. If you do choose to use it, which I would really appreciate and would support the channel, you do get up to $500 as a sign-up bonus. I get a little kickback as well. You don't have to use the link, but if you like the way I broke this down, you found this information valuable, I would definitely appreciate it. The first thing you have to understand when we're talking about M1 Finance is pie. 3.141597, cherry, apple, pumpkin, banana, pecan, banana. No, not this type of pies. I don't know what you pictured when you pictured a portfolio, but with M1 Finance, the entire app is based off of investing pies. So your portfolio is a pie, a big circle, and each slice is an individual security or investment. So for one portfolio, you might have a pie that has 8 slices. 4 of them are stocks and 4 of them are ETFs. Now that's not a recommendation, I'm just saying that's potentially what it could look like. All it really is a way to visualize your portfolio, and although it's very different than how a typical broker works, it fits along with the investing strategy that works best with M1 Finance, which we'll talk about in a second. If your portfolio is a pie and each individual investment is a slice, how do you decide how big each slice is? Well, obviously it's up to you to strategize how much you want to own of each stock, but the slice size depends on how your portfolio is weighted. And that's the mindset you have to have as an investor with M1 Finance. The magic of M1 Finance is that after you select how big you want each slice to be of that pie, it will maintain that size no matter how much money you put into that pie. So for instance, let's just make it really simple and decide we want to make a pie with 2 slices.
Obviously, you probably want to have more than 2 slices, but not financial advice.
One slice is Facebook stock and one slice is VOO, a Vanguard ETF. If you say, hey, I want the Vanguard ETF slice to be 70% of the pie and I want the Facebook stock to be 30% of the pie.
Again, I'm not advising this.
Then if you put $1,000 into that pie, it's going to put $700 into Vanguard and $300 worth of Facebook stock. Now say you're convinced that strategy with 70% VOO and 30% Facebook is going to make you the most money over the next 10 years and you don't want to change your mind about it, you want to see it through for the next 10 years. Then theoretically, if you keep using M1 Finance, every dollar that you put into that pie will get split 70-30 between VOO and Facebook. Okay, so now hopefully you understand pies, and that really drives the rest of M1 Finance, what it's good for and what it's bad for forward. See, the great thing about pies, in my opinion, is it makes passive investing very easy. Once you decide what you want your pie or pies to be made of, any money that you deposit, you can set up a recurring transfer from your bank account into M1 Finance, and your money will automatically be invested into those stocks depending on the weighting of each slice in your pie. It's designed to dollar cost average so that as you increase the amount of principal in your portfolio, it's automatically being invested. It's like a switch, you can turn it on and forget about it and never have to worry about your money being invested. A lot of times people get tripped up, and I know I certainly have made this mistake. I'll deposit money from my bank into my brokerage account, but then it sits there in my brokerage account as cash. And that's not doing me any good. It's not even earning me the 0.01% that's in my checking account if it's just sitting in my brokerage account uninvested. So that's the biggest peace of mind with M1 Finance, is that once you set up your account, you know that as soon as your money is coming out of your bank into M1 Finance, it's being invested according to the strategy that you set. Now, of course, it's not all sunshine and rainbows. There are cons to this type of investing strategy. The first major con with M1 Finance is that you cannot time when you buy stocks. If you're looking to day trade or even swing trade over a period of a few weeks at a time, maybe there's a stock that's down bad and you think it's worth more and it's going to rebound in the next few days. Moving money into those type of swing or day trades is really difficult, if not impossible, with M1 Finance. In fact, with the free version, you're only given one trading window, and that's right at market open, 9:30 in the morning. So as your money funnels into your M1 Finance account from your bank account, any stocks or ETFs that are purchased will be purchased with the free version in that morning trading window, and you can't change that. Another thing that I'm not a huge fan of is because M1 Finance splits your money up into a bunch of different investments, there is a $100 minimum deposit to get started. So it's not necessarily built for complete beginners either, because you have to have at least $100 and you have to come in kind of having a strategy for how you want to set up your portfolio. And ideally, you don't really want to touch that portfolio composition all too much. I mean, of course you can make changes anytime you want, but M1 Finance is designed for you to set up a strategy and stick to it. And one more thing that I forgot to mention that is actually a huge plus with M1 Finance is that there are a ton of different type of accounts that you can open with them, not just your standard brokerage account. Because of everything we've talked about this video, you could probably tell that M1 Finance would make an excellent retirement account. Because with your retirement account, it's really for the long term. It's sort of a set it and forget it strategy. You want to be constantly contributing, but you don't want to change your portfolio composition or makeup all that much. You want a consistent strategy. M1 Finance was one of the first major brokerages to offer a really good suite of retirement accounts. They offer traditional IRAs, SEP IRAs, and Roth IRAs. You can also very easily roll over your 401k from a previous employer over to M1 Finance. You can even set up a trust or a custodial account through M1 Finance. So if you're looking to invest on behalf of your kids, M1 Finance could also be great for you. If you just want to sort of contribute a certain amount each month to their portfolio, not really changing the strategy too much, there's no better place than M1 Finance for something like that. So how much does all this cost? Well, the great thing is that everything we've talked about in this video so far is absolutely free. You can create your account, link your brokerage, set up your pies, even choose from a preset roster of expert pies where you can track along with hedge fund portfolios, different sector portfolios, and a ton of other preset pies that you can easily click to add to your portfolio. So you can customize your pies and then automate your investing, and all of that, as long as you have $100 to deposit, is absolutely free. Now, they have a bunch of other features like margin trading through M1 Borrow. They have a cash management program, kind of like a checking account that right now definitely gives you a higher rate of interest than the average bank account does. And they also have what's called an owner's reward card. So if you're an M1 Finance super fan and you want to look at their other features, they have a lot more to offer than just a standard brokerage account or retirement account. And if you get on to M1 Finance and again, you love it, they do have a tiered M1 Plus account. It costs $125 a year. You get a cheaper rate on borrowing money for margin trading if that's something you choose to do. I don't really advise it at all. But if it's something that you're comfortable with, how you leverage, of course, is completely up to you. With M1 Plus, you also get a higher interest rate on your M1 spend checking. You get 1% cash back if you choose the M1 debit card. They add an additional trading window so that you can buy stocks in the afternoon as well, if that's something you're interested in. They also have what's called the owner's reward card, which is super unique. It actually allows you to earn cash back at the companies where you own stock. And their cash back is ridiculous. You can literally get up to 10% back right into your investment portfolio based on where you shop most often among the stocks that you own through M1 Finance. The card does cost $95 a year, but you can get M1 Plus to waive that $95 fee. All of that is $125 a year. I definitely would recommend starting with the free version first, but again, if you're an M1 super fan, after trying it out, testing it out, they do have that option for M1 Plus, and it gives you access to a suite of benefits across the platform. Everything in the first part of the video besides M1 Plus is totally free, and then M1 Plus is $125 a year. So let me just break down who I think M1 is right for and who I think M1 might not be the best brokerage for. First of all, you want to examine your time horizon. If you're a long-term investor who's not really interested in taking advantage of short-term shifts and changes in the market or in individual stocks, then M1 Finance is totally built for you. But if you're a short-term day trader or swing trader, M1 Finance is probably not where you want to put all your money. And maybe you want to do a little bit of both, and so you can put your long-term money into M1 Finance, and then maybe use another brokerage account for your shorter-term plays. I also think if you're a beginner, M1 Finance is not the first stock brokerage account I would open, because you kind of have to have a strategy going into it of how you want to make up your portfolio, how you want to build your pies, and how you want to weight them. And you also have to have confidence in that strategy. It would just be annoying to keep changing your pies and changing the weighting up every day, all the time. So I would say you need a little bit of experience under your belt, and you need at least one long-term strategy in order for M1 Finance to really help you and save you time and energy. So if you're an experienced investor with a long-term time horizon and you want to be able to set up a retirement account or a brokerage account with a consistent strategy that allows you to customize what you want to invest in and plenty of options to do that, but you want to automatically transfer from your bank account and invest into your portfolio week after week, month after month, or year after year, M1 Finance is perfect for you. M1 Finance is a spectacular investing platform with an awesome track record, but it's definitely not right for every investor. If you're interested in starting an account today, I do have a link in the description below, and would be super grateful if you chose to support this channel by signing up through that link. I hope you liked this video. That was M1 Finance. Good luck out there, survivors. Stay safe, and I'll see you guys in the next video.